Welcome to Rural Classroom Live. I'm Albert Liu here alongside Rick Rule as usual. Rick, how are you today?
I'm fine. I apologize for being on late. Being an actual banker is different than being a banker in waiting. And also, as you know, technologically, I'm an inadvertent Luddite. So thank you for helping me get on this episode.
No problem, no problem. I imagine you weren't minding the tellers, the cashier, or something like that, Rick. So what were you actually doing?
Well, it's interesting. Now that we're a real bank, operating, in fact, a small branch in Uppsala, which I have nothing to do with, we're beginning to do banking. So I've been talking to a couple of very large potential customers about switching their business to Battle Bank, a bank which is no longer an organization. Forgive me for talking about my favorite topic, but we're now bankers. And 5 years of preparation and $20 million in investments in technology all come to bear in the market in 3 months. We're testing out the bank uh, on customers like me, fairly forgiving customers, so that we make all of our mistakes with our money and none of it with yours. But in preparation for opening, we are beginning to talk to depositors and borrowers and consumers of services in anticipation of opening. I'm delighted to say that over 18,000 people are now on our wait list and have, at least for 16,000 of 18,000, told us specifically what products and services that we have on offer that they'd like to avail themselves of. So now we're beginning to be in the process of putting all the hard work that we've done in preparation into action. Highly, highly, highly exciting period, but one that keeps me increasingly busy, Albert.
Rick, what are the specific selling points for business accounts? We talk a lot about the retail market, but now you're wooing business clients. What are the specific selling points for them?
Well, for one thing, service. Uh, you go to, if you're a small business, you're a branch, and you are confronted with a branch manager and perhaps a loan officer who, frankly, doesn't know very much. So one needs to wonder what benefit that is to you. Now, to be honest, Battle Bank does not propose to be all things to all people. If you are looking to become a bank customer of ours and you're a furniture retailer, we're likely not going to be able to help you. Uh, if you are a construction company or a builder or a metals dealer or a coin broker or an oil and gas company or a mining company, we're likely to be much more useful to you. Where we can help independent business people is that it's possible to set up a business account with us, a business checking account that has one really redeeming feature compared to most banks. We might pay you interest. Most business checking accounts, as an example, never mind the balance, are impolite enough not to pay interest. We have found at Battle Bank that our customers are interested in interest. And so we'd love to have that discussion with you. But the bank is of more interest, frankly, to what I would describe as the underserved parts of the American market. Remember, Albert, that we described Battle Bank as a community bank where community isn't described geologically or defined geologically, but rather by shared interests, aspiring customers, people who desire to increase their material net worth through their own efforts. Uh, People who believe in precious metals, people who are contrarian, people who are savers. To that end, our personal accounts, including your checking account, provided that your balance is over $10,000, will pay you interest. There's in excess of $3 trillion worth of money deposited with US banks that does not pay interest. These people are arithmetically challenged, and we'd like to help educate them and reward them simultaneously. The second thing is that we're heading into a period, Albert, and I think nobody can deny this, where there's increasing turbulence uh, in currencies. Rather than confine depositors to one currency, Battle Bank gives people the ability to pick and choose between 20 currencies. A first generation business person who lives part of their life in Canada and part of their life in the US, does business on both sides of the border, needs to bank in both currencies. We'll be able to do that simultaneously, which most banks can't do. And we'll be able to affect currency transactions between accounts at very, very, very cheap rates compared to our competitors, including the Canadian or other foreign banks. Another beneficiary, and these will be people at the real classroom, are self-actualized people who want to control their own retirement accounts. At most institutions, IRAs and solo 401ks are really designed as receptacles for Wall Street products, annuities, mutual funds, stuff like that. At Battle Bank, your retirement product can own a duplex or a triplex or a franchise that you operate. Mr. Trump recently said that he's going to change things so that IRAs can participate in private credit. No permission needed at Battle Bank. If your IRA is a checkbook IRA and owns an LLC, that LLC can invest in any legal activity with no permission from the president. And then, of course, on the lending side, most of our competition around the world as banks doesn't believe that precious metals are good collateral. We do. JP Morgan Chase, it turns out, will avail people loans on their precious metals with a $10 million minimum. We'll have a $100,000 minimum to start. So for self-actualized people, people interested in gold and silver, people interested in banking in many currencies, and people who suggest that the collateral for the loans that their deposits goes to fund are denominated in gold and silver, Battle Bank might be a very good place to bank.
All right, wonderful. Before we get to sort of the news of the day and then people's questions, I just want to talk about the boot camp. Rick, we had a great time over the weekend. I feel pretty good considering we just had the event. I usually spend the next week recovering, but feeling pretty good. The team worked really hard to get the archive up as soon as possible. And judging from the comments we're seeing in the discussion group, people really appreciate that, Rick, because they're just eager to get back in there with their notes and go over the material again. So if you did attend, there should be an email in your inbox telling you how to retrieve the archives. If you watched live, you can just go back to where you saw the event live, and that's where the archives will be. But it's all there, including the audio-only version that you can download to your device. We got a discussion group that is very active here. First comment by Tom. Rick, I was blown away on this boot camp. Well put together. I'm definitely going to align my notes and rewatch. So people very appreciative of the event and the fact that you get unlimited access to the archive after the event is finished.
Albert, for Luddites like Rick, how do they access and participate in the discussion groups? Tell a 72-year-old who you have some experience with how he might be able to access those discussion groups and pay it and participate in them.
Right. So all of the archives for all of our boot camps are hosted within Rule Classroom. You do receive an email from the organizing team explaining how you unlock this. So it's just a couple clicks with the mouse, and that unlocks a space. When you go into Rule Classroom, you can just type Gold Bootcamp in the search bar, which always appears at the top here, and that will reveal the 3 boot camps that we've hosted. And if you have clicked the join or the access link, then those will be unlocked for you. You can just go in, and then once you're in, once you click Gold Bootcamp Part 3, you're just going to see 2 tabs here. One is watch, one is discussion. So under the watch chat tab are all of the different segments throughout this the long day, including the chats that we held in the sponsor booths. Also, there's a discussion tab, and that's where you can go and have discussions and ask questions. And what I've noticed is that there are great discussions in there about the material, but also if anyone's having trouble navigating the site, the people are very quick to jump in and help out. So that's where you go. Any questions, just email bootcamp@rulclassroom.com, and the team will be there to answer any of your questions.
Now, Albert, I think it's important to note that there will be probably 1,000 people on today's calls who weren't at the boot camp. If those people want to access the boot camp, uh, point out the fact that most of the information in all three gold boot camps was timeless, which is to say it'll be valuable a year from now, it'll be valuable for 2 years from now. Anybody who wants to can buy the boot camp on a delayed basis with a full money back guarantee. If you buy the boot camp, participate in the boot camp, and you think for some reason that you didn't get your money's worth, we'll give you your money back. So perhaps you could describe that process. How
Well,
do
that's
how does
easy.
one
Yeah,
retroactively become a subscriber?
right. It's the same link. So bootcamp.rulclassroom.com. You'll see a link where you can get the archive, or you can go back and get all three if you want at a discounted price. So, and again, any questions, bootcamp@rulclassroom.com. Our people will be happy
And
to
then a
answer any
final
questions.
question, Albert,
Mhm.
if people want to discuss generally the topics in the boot camp outside the boot camp in the real classroom, how do they initiate discussions like that? Where's the right place to go?
Outside the boot camp, well, we have like
In
many.
in the classroom,
Uh, sure, but you weren't you so if you didn't attend and the actual boot camp space is not unlocked, you still have access to all of our free complimentary areas, including intro to natural resource investing. The site is set up in a way similar to like other social media sites where there are many places to hold discussions.
right?
So it's best to obviously hold the discussion adjacent or in the space that you're discussing, but you can always add a hashtag to your comment, which will make it easier for people to find if you want to talk about the boot camp in particular. So hashtag Gold Bootcamp Part 3, if that's what you want to do.
I've just seen nascent discussions about the boot camp or topics described in the boot camp in the real classroom. And I wanted to give people the ability, uh, as an example, to engage in discussion around the boot camp to figure out if they wanted to buy the boot camp or not. I think it's important that people try before they buy,
I
and
see.
that's
I see what you're
all
saying.
there.
Okay.
Like you, Albert, most of the well, in fact, all of the communication that I've gotten personally about the boot camp has been very, very complimentary. So, congratulations on producing another fine investor education product. Note that this is the third of a three-part series. The first was about gold itself and how to own physical gold. The second was about the best of the best gold equities. Great, great, great segment. The one that we just got done is meant to cover the rest of the gold equities waterfront. I think it's absolutely timeless information, but it doesn't need to be timeless. It's topical right now. So for anybody who didn't participate in those discussions, they are available still, and they still come with an absolute money back guarantee.
Yeah, Rick, one of the things that was actually timely was your discussion on why you are bullish, but at the same time, why you've been an aggressive seller. And I've had a lot of comments coming in appreciating your transparency in that regard. Um, I haven't seen anyone accusing you of raining on the parade. Everyone is appreciates that level of transparency. Before we move on, I want to mention one talk that I really enjoyed, and that was Jonathan Goodman,
Yes.
Rick. That one I've already gone back and watched again, and that was just an outstanding talk. I mean, he's had experience in various areas, I guess, of natural resource investing, and I like the way he talked about his business in terms of allocating capital, in terms of looking for tier one economics, and it reminded me of something the way Warren Buffett talks about his insurance business. He says when competition heats up, some insurers are tempted to write policies that they really shouldn't write.
Right.
And they don't find out until much later that they really shouldn't have written those policies. And that reminded me, John's presentation, part of it reminded me of that, where he's saying, look, we're very careful about about looking at the economics of a project and what we expect and when we're willing to write the check, Rick. What was your takeaway from Jonathan's talk?
Well, there's a reason why I'm a large Dundee shareholder. I think John is a very good investor. His father, Ned Goodman, was one of my most important early mentors. So I would suggest that John benefited from more mentorship from Ned than I did, given that he's Ned's son. Both John and I were directly mentored by Hugh Mogensen, one of the greatest economic geologists that ever graced the earth. Uh, I'm not surprised that he did a spectacular presentation. John is not always a good promoter, which says a lot for him as a teacher. Like you said, I thought that he gave a sort of a great nuts and bolts discussion about the due diligence process that goes on at Dundee. I would urge people to replay his presentation and then use it against the techniques that we describe in Introduction to Natural Resource Investing. The whole point of the Rule Classroom is not for you to ask me, what do I think about amalgamated moose pasture mines, but rather develop the skill sets to analyze it yourself and provide a forum in the discussion groups so that you can compare and contrast your own techniques with regards to valuation with other educated members of the classroom. And I think the Goodman presentation went a very long way towards helping people do that.
His discussion on sort of the feasibility studies and whatnot, how much confidence he puts in them, and then, their efforts to sort of recreate these analysis under NDA. It seems like he does have to probably walk away from a lot of opportunities when it comes to people who aren't willing to do that with him. Is that correct?
That's true. And he said something else very important. He said that a project can be viable, but not right for Dundee, which is to say, even if it meets all the tests, if it doesn't meet the personal test, he's not interested. I think that's extremely important. What he's saying is that you need to be a self-honest investor. In addition to investment quality, you need to determine where the investment fits in your portfolio. Jonathan has decided that he's going to be a value-added investor, which is to say he is going to put his money in circumstances where his own participation makes his money more valuable. That self-honesty, that definition of purpose and definition of technique is something that more investors need to emulate. The early discussion that we had, where I told our students that despite the fact that I think the gold and silver sector is going to do very, very well, that I have reduced my exposure into the speculative stocks, despite the fact that they're going to go up because the concentration that I had in illiquid speculative securities was inappropriate for me, is precisely the sort of thing that Jonathan talks about. And I think that investors, in addition to increasing their levels of sophistication and education, also need to be more introspective. What is it that they're trying to accomplish? How much risk are they willing to endure? What's their time frame? What facets of the business are they well enough educated in that they can be confident and thus patient? That was an important part, I think, of Jonathan's presentation.
What did you think about specific metrics and rules of thumbs he gave in terms of providing actual numbers, Rick? Those are hard to get.
They're unassailable, and they aren't that hard to get. You just have to do it. That's publicly available information. What you need to do is be educated enough as a speculator that you know that they're valid. The idea about the mined rate relative to the foot tons in the deposit, which is to say, if the feasibility study proposes a mining rate that is impossible to obtain relative to the geography of the deposit, you need to understand that the net present value is too high because they propose extracting the resource at a faster rate than they'll actually be able to do it. And you need, first of all, to penalize the net present value number on a time value of money basis because they're pulling the money out faster than they actually will. And you also need to assess either management's honesty or their intelligence. That's important to do. The beauty of high quality value added investors, the reason why I invest in Jonathan Goodman's efforts in addition to my own, is the fact that they have enough expertise on staff that they can look at a feasibility study and they can challenge or validate the assumptions. They don't just look at the summary and conclusions page. Rather, they tear apart each of the PEA, the PFS, and the BFS. And I would suggest that that's their secret sauce. The other thing with Jonathan is that he is smart enough to change his assumption when the circumstances change. They were early investors in Reunion, and they invested in Reunion because they thought that the surface expression of that deposit in saprolites would likely have total strippable reserves in excess of, quote, 500,000 ounces. Their initial goal was 500,000 ounces. I would suggest that that deposit now is 8 million ounces. And as the data on the ground changed, and part of it changed in relationship to the geological understanding of Julian Barnes at Dundee, their outlook and their goal for the deposit changed with it. A lot of people's impression when they buy a stock is static, and their understanding of the company and the outcomes that they expect don't change as the news changes. At Dundee, they are so involved in companies. And I'm not suggesting, by the way, that our students attempt to mimic this involvement. Jonathan has a great staff, proprietary staff of geologists and engineers, financial analysts. By the way, he's a hell of a financial analyst himself. That they can do much, much, much more intelligent deep dives. But what you might do is take a look at the stocks that they invest in. And if there is some decline in share price with no change in the news, you might piggyback on their due diligence.
Okay. One last thing before we move on. Later this month, you're going to be in Las Vegas, Rick, which doesn't happen very often. But you're going to be there with Battle Bank. Frank Trotter is going to be there. My friend Joel Littman is also going to be there. This is a Stansberry conference. Rick, what are people going to be learning from you if they join you in Las Vegas?
Well, they're going to learn a lot from a lot of people, not just us. From myself, I will speak to the broad basics of natural resource investing, which students at the classroom are very familiar with. The importance of contrarian strategies, the importance of education, the importance of the fact that your conclusions have to change as the facts change. Yes, I'll name some names. I'll talk about the reason why I'm shifting more and more money into oil and gas because of my perverse love of hatred and the fact that the oil and gas section is hated. But mostly, I'm going to be in Las Vegas trying to increase the basic business of Battle Bank, trying to explain to individual investors, savers, depositors, borrowers, whatever, why they should do business with Battle Bank, or in certain cases, after I talk to them, why they shouldn't do business with Battle Bank. There's some people out there who are probably temperamentally and fundamentally unsuited to doing business with a bank like Battle Bank, and we just as soon avoid them. But that's really what's going to be. I noticed that we don't have Porter Stansberry's account yet. We don't have Joel Littman's account yet. We don't have your account yet either. So a lot of what I'm going to do in Las Vegas is be assisting people in addressing their oversight with regards to doing business with Battle Bank.
I've been to many conferences with the two of you where you're exhibiting and the bank is not yet opened. I'm expecting you're going to have a lot more energy and enthusiasm now that the bank is open and you can tell people about what's actually going on.
You know, that's fun. We had to answer the question, when are you going to open, with that's up to the FDIC. That wasn't a satisfying answer because it didn't satisfy me.
Not for anyone.
Now I get to say, if you happen to live your life in the upper Midwest, proximal to Uppsala, we're already open. And we should be open on a national basis in early January. We have a $20 million investment in technology and processes at the bank, obviously more than sufficient to run a single branch in Uppsala. And we're testing our products and services right now on ourselves. The best depositor to disappoint in the near term is Rick Rule. So when I deposit money in the bank, does it go where it's supposed to go? When I write a check, does the check cash? When I send a wire, does the wire go? When I buy gold, do I get my gold? When I borrow against my gold, how does that all work? So we're going to shake in this $20 million technology investment with our own money as customers and then open the bank to the waiting list in January, which I cannot wait to do.
Okay,
I
great. So
literally cannot wait to do.
so January, people will be hearing from you sometime in December or January about that.
Ad nauseum.
Yeah. Excellent. Okay. Let's get to the markets now, Rick. Little bit of reversal in gold. The GDX and some of the big producers and streaming companies noticed Royal was down, I think 5 or 6% actually. But even Franco was down 4%. Anything worth commenting on there, or is this just the regular, you know,
Yeah,
ups
the
and downs?
regular. I mean, what we saw for the last 3 weeks was what Canadians call a hockey stick graph. And I remind my friends that the backside of a hockey stick is just as steep as the front side and a lot less fun. The market was overbought. You had a perfect circumstance around the gold narrative. Goldman Sachs, Bank of America, JP Morgan Chase, a whole parade of billionaires, all saying at the same time that you ought to be in the gold trade. And a lot of people listened. Remember that prices are set on the margin. They're not set against the length and breadth of the inventory or the buyer's intentions. They're set on the delta between buyers and sellers on any particular day. And for 3 weeks, we had way, way, way more buyers than sellers. Arguably, in the near term, most of them expressed their opinion. And the buying pressure relative to the selling pressure began to abate today. I need to tell you that although I myself am in the process and have largely completed the liquidation of between 25 and 30% of my speculative portfolio, I fully expect the sector to continue to perform. And to the extent, which I think is unlikely, that the precious metals juniors return to their unloved status, I might rebuy those positions. I was able to completely de-risk my portfolio with a fairly small selling, sort of selling. And I put some of that money back into gold itself and Franco and Wheaton and Agnico Eagle, which is to say the best of the best, which is one way of saying that I switched a little bit of money out of the alpha trade, where I think the money's going, back into the beta trade because I think it's cheaper, although most of the money in the world is going the opposite direction. The other part of the money I'm putting in the oil and gas business, which is in fact hated. Um, I welcome lower gold equities prices, given that I would love to buy more Royal Gold, frankly, given that I'd love to buy more gold. I personally would be happy to see those stocks fall 30% as opposed to 5%. If you want to own something, you would rather see it cheaper than more dear. I realize that many people didn't position themselves in the gold trade as early as I, and so they don't have the same fondness for price declines. But for me personally, if something that I really want to buy that I know well declines in price, I'm happy, not sad.
All right, Rick, let's get to some of these questions now. Richard uh, wants to know about two companies, Rick. One is Emperor Metals. Any idea why it's dropping? And the second is about Trilogy Metals, which you've commented on in the past that you would avoid until the Ambler Road was approved. So, Rick, comments on both of those.
I'm an Emperor shareholder. Emperor is a deposit that has been considered for many years subscale, which is to say it has been perceived to be, at the then prevailing gold prices, a deposit that was too small to support the construction of both a mine and a mill. $4,000 gold changes the headline economics. But much more importantly, Albert, as you and I learned at the Boca Raton conference in my discussion with Amar Al-Jundi, deposits in the Abitibi that were stranded are not necessarily stranded anymore. There is so much investment in infrastructure, roads, power, existing mills, that a 1 million ounce or 1.5 million ounce deposit that's 15 miles by trucking away from another mill suddenly becomes economic. If you don't have to build a mill, but rather you build a mine and you truck that material from that mine to an existing mill that is perhaps hungry for feed, the circumstances that existed for the last 30 years in my own mind, which is to say that those orphan deposits would stay orphan, is no longer the case. I think that was an important piece of intelligence that I gathered from my own conference, talking to somebody who is the king of the Abitibi, Amar al-Jundi. I think in Emperor, what happened is the stock ran too far too fast. People began to look at the PEA and the work around the BFS, looked at the market cap, did a net present value analysis, and said they didn't know what time the start was going to be, so they didn't know how to discount the deposit adequately. Without perhaps looking to the potential for exploration upside, which the market is starting to reward, but also without thinking about that deposit. We've got no guidance from management in this, about thinking in the deposit, not in the context of building a mill, but rather in the context of building a mine, or pardon me, building a mine and shipping material to adjacent infrastructure. With regards to Trilogy, there was an amazing piece of news. That famous investment manager, hedge fund manager, his name is Trump, Donald Trump, decided that he was a better steward of my capital than I was. He decided specifically that he would, on my behalf, buy 10% of Trilogy. While I don't disagree with his investment selection, I certainly disagree with the fact that he's the right person to manage my money. That notwithstanding, my preference notwithstanding, the market loved it. And what the president did do, first of all, is negotiate the maximum available discount and get a warrant. So, in that sense, the similarities between him and an investor and me as an investor is very similar. He's a much, much, much better negotiator than I. Now, frankly, Albert, if I controlled a bunch of nuclear weapons, I'd probably be a better negotiator than I am, but I don't. The other thing he did is he threatened at least to eliminate the regulatory logjam that has been responsible for the decline in Trilogy. For those people who don't know the company controls a copper district in northern Alaska. I say a district because it's more than a mine. It's two deposits. It will be a camp. Very, very, very high quality deposits in the middle of nowhere, somewhere in the neighborhood where Santa Claus is alleged to live. And access to this would be through an as yet to be permitted or constructed road. This road has the assent of the locals, which is to say the Aboriginal and First Nations people who are in the area want the road. They will ultimately own the road and benefit from the tolls. The Biden administration, however, basically vetoed the road. And what Trump said is, there's a new sheriff in town. This game is on. I'm going to get this road built. I'm going to eliminate obstacles to permitting. And Trilogy is going to be a fact. To get Trilogy from where they are now to the time when they can be benefited, they need cash. Here's my check. The market's response to that was dramatic, truly dramatic. I guess many people don't have the same philosophical objection to the president managing money on their behalf. Others who are Canadian are probably delighted that the US taxpayer is in effect guaranteeing their success.
Okay, thank you for that, Rick. Let's go to Webster. What's your thoughts on Tutor Gold and what you think about the lawsuit with Seabridge?
I have no opinion on the lawsuit. I've tried to speculate on litigation for years with virtually no success, so I'm not going to burden you with my opinion. Tutor is a large, low-grade deposit. What attracts me increasingly is that the deposit is so large that I suspect that there will, and the same comment with Seabridge, there will be some place in their land holding where there was sufficient rock preparation during the period of fluid inclusion that you'll have a high grade starter. I don't own Tutor. I need to say that. We have an upcoming boot camp on northern British Columbia, in particular the Triangle. And Tutor is a company that I will be spending a lot of time studying in the next 2 weeks to determine whether or not they're suitable for inclusion in the Golden Triangle Bootcamp.
Okay, thanks. Theodoro asks, Rick, you hinted previously that a Newmont-Barrick merger might be in the works. Aside from the Nevada assets, is there synergy to be had?
I didn't hint. I speculated. No, I didn't. I didn't even speculate. I wished. Uh, a merger of Newmont and Barrick has the potential to reduce the general and administrative expense by half. You try to take the best people from both companies and you allow other people to explore different employment opportunities. You don't need two headquarters. You don't need two listings. You don't need two odds, all that kind of stuff. So you get more cash flow or more assets under management for every dollar of G&A you spend. That's good. Big companies enjoy more trading liquidity and hence higher share prices and hence a lower cost of capital. In a capital intensive business like mining, that's good. In addition, you have the ability, if you did it, to replicate the success that Newmont has enjoyed since the Newcrest acquisition in selling off tier two assets that didn't really move the dial at Newmont and competed for sustaining capital investments and love, care, and attention. If you merge now Barrick and Newmont and you run a very hard-headed analysis over which assets of the combined entity have the best opportunity to deliver shareholder value over 10 years, and you turn the rest of them into cash in a seller's market, the synergies there are spectacular. I will remind the classroom that when Newmont merged with Newcrest, they guided the market that they were going to sell their tier two assets and they expected to receive 2.2 or 2.3 billion dollars, pardon me, in compensation, which they would then use to improve their balance sheet. By the way I count, they have thus far realized 4.7 billion of 2.2 billion, with contingent payments coming, and their balance sheet has come from challenged to pristine. The ability exists were Newmont and Barrick to merge to repeat the process. And that's extremely exciting. If you take it, and I'm speculating wildly now, if you took the resultant company one step further and you emulated the vision Amar Al-Jundi articulated with regards to Agnico Eagle, and you focused on areas where your new investments had to leverage off your old investments. In other words, if you drew very tight circles around your areas of competence and your areas of operational synergy, and you were willing to sell off even tier one assets that you thought wouldn't return the same yield on future capital employed as assets within your circle of competence or infrastructure. If one was to allow oneself to dream, the returns to the Barrick Newmont surviving entity might begin to resemble the returns that have accrued to those of us who have been lucky enough to own Agnico Eagle.
Okay. Rick, are there other prominent voices, shareholders, activists pushing this line? Because that's what happens in other industries.
I don't know, to be honest with you. I haven't paid much attention. I just threw it out there to see how much noise it would garner. I mean, I will say that I emailed my response to people like Evie Hambro that are large shareholders of both entities, and it would delight me no end. The reason that the speculation became timely is because both companies allowed their CEOs to pursue other employment opportunities. So the objection to the merger at the top, which is to say the ego objection, which is I approve of this merger if I run it, which has a 50% chance of success given that they're CEOs, that's temporarily gone. And I would hope that in the search for new CEOs, that the boards of the respective companies and their larger shareholders would engage in some introspection about how the interests of the owners might be best served over the next 10 years, as opposed to being constrained by incumbent politics.
Okay, very good. Let's see. Han is asking about the soon-to-be Hemlo Gold. Do they get a good deal from Barrick? Did you participate on the financing? Thank you.
I did not participate in the financing. not because I don't think it's a good transaction, but rather because my plate was full of opportunities that I understood better. I think on the face of it, they did get a good deal from Barrick. They paid a very, very, very full price for the asset that they bought, but they paid a full price for an asset that Barrick has been using as a cash cow for 8 years. There has been insufficient capital reinvestment at Hemlo in sustaining capital, which means the costs are higher than they otherwise would have been. There has been very little brownfields exploration at Hemlo, despite the fact that that deposit has yielded 30 million ounces historically. And so the opportunity that the new team has, first of all, to realize higher gold prices. The gold prices were much lower when this transaction was negotiated, as well as increase the operational the performance of the mine by giving the mine the love, care, and attention that it didn't get in the last few years of Barrick's stewardship, and also their ability to avail themselves of more exploration expenditure, I think means that, and this is a speculative comment, that there might be a lot of upside here.
All right, thanks, Rick. Question from Daniel. Rick, company called Q Energy. Is that too small for Rick?
It is not too small, but I don't know enough about it to suggest that my comments might have value.
Okay. Let's see. Eric is asking about Evolution Mining and Genesis Minerals. Thoughts and ratings, Rick?
My rating on Evolution has improved. I have it as a 5 now. I don't have a rating on Genesis.
Okay.
I,
What
I
changed,
will
Rick?
say that the founder, or one of the founders of Evolution, Jim Askew, uh, an absolute legend and a wonderful mentor of mine, will be joining the Living Legends panel at the Boca Raton 2026. I've been trying to get Jim Askew to come to this damn conference for 20 years. And finally, he relented. And I'm delighted to say that he's going to join the panel because, I mean, what an experienced guy. He's been part of founding, I think, 8 successful mining companies during the period of time I've known him. Some of the reputation I enjoy, particularly for investing in Africa in Australian listings, is really a consequence of my knowing Jim Askew. And he is, of course, one of the founders of Evolution.
What happened with Evolution, Rick? Was there a change in circumstances or a change in price that triggered the change in rating?
Yes and yes. Uh, or yes, yes, and yes. There were a couple of changes in direction. And one of the changes in direction was around things like nickel, and there was a change in price.
Okay, great. Okay, here's one from our friend David. Um, I think Rick mentioned Shamron Petroleum a while back. Uh,
Shamaran, yes.
can you comment if you did? Give a rating, and he's also interested in Angkor Resources.
I have no comment on Angkor at all. I don't know it. I don't own it. I own Shamaran. And I would say that that's a stock that's appropriate to Rick Rule, and maybe not too many others. Shamaran is a Lundin controlled vehicle, which is important to me. I've done business with the family since 1974, and I know them and trust them. I'm on my 3rd generation of Lundin now. The Lundin boys don't directly, but rather indirectly, run the oil business. But their oil businesses have traditionally been very well run. The thing that's interesting about Shamaran, in a good and bad sense, is that they're focused on Iraq, northern Iraq, and Kurdistan. And they have, relative to the market cap, enormous reserves base and spectacular exploration upside. Uh, Northern Iraq, I'm given to understand, and Kurdistan is also on the ground sociologically fairly safe. But one needs to describe the country very much as a work in progress. Um, and for that reason, because of, I think, the certainty of at least sufficient political instability to cause volatility in the stock, people who go to own Shamaran have to be very introspective with regards to their staying power if they see Iraq or Kurdistan return to the news in the fashion that it's done in the last 10 or 15 years. I own it. I own it with an amount of money that if it went to zero, it wouldn't change my decision as to what to have for breakfast. Because I think there's a possibility as opposed to a probability that in the oil price environment that I think is likely 3 years from now, that the stock could be a 10 bagger or a 20 bagger. I've made a lot of money with Lundins in politically risky oil plays. We were in South Sudan during the war, and that was a 25 bagger. We were in Syria before the war, mercifully, and that was a 20 bagger. So, in effect, if you look at my history with the Lundins, I'm playing on the house's money with Shamaran, but newcomers wouldn't be.
Rick, what are you seeing in the economy or in the world that causes you to put a 3-year time horizon on the oil price?
I suspect that the oil quote, $60 more or less, with cresting production, and the copper price, which is only up 5%, with the shutting in of 7% of the world's primary supply between Grasberg, Kakula, Cobre Panama. That suggests to me, Albert, that the economy is weaker than people give it credit for being. Uh, the copper price in particular, if you had a better demand between buyers and sellers in the copper space, 7% of copper supply going to copper heaven in the near term should have had a much greater impact on the copper price, and it didn't. And that tells me that in the near term, copper demand is pretty weak. Uh, the other anecdotal sense I get of that is the Chinese, who are absolutely positively reliant on Pilbara iron from Australia, taking such a hard line with BHP on iron prices. That tells me that in the near term, the Chinese don't need that iron. If they needed the iron, the Chinese have traditionally been extremely aggressive buyers of high quality iron. They have increased their access to supply because they've been the high bid. The fact that the Chinese feel able to take such an aggressive role with Australian iron before they enjoy replacement iron from Simandou, and the fact that the copper price moved up 5%, given the shutdown of 7% of world's copper supplies, and the fact that the oil quote has stayed so weak, despite cresting, particularly parastatal production of oil around the world, tells me that demand in the near term is much softer than people believe. I've said in the classroom before, Albert, that supply shortages in industrial materials are inevitable in 5 years. But you can have supply shortages if you have economically induced demand shortages, and they balance. The price doesn't move. And I think we're seeing that right now in the nickel quote, in the fertilizer quote, in the oil quote, in the natural gas quote, in the copper quote. I think we're seeing it right now. I can't put my finger on why that is. I just would have expected that the intersection of supply and demand would have resulted in higher prices if demand was what it's reputed to be.
All right, thank you for that. Let's see, from Eduardo, Rick, predictive and Robex. Rick's thoughts on the merger.
Merger made in heaven, I think. Um, I like mergers generally, but I like mergers where there's synergy. These are companies where they can use the free cash flow from one deposit to build the next deposit, where the deposits are of similar size and scale, where the corporate cultures are amazingly similar. The companies will have the ability, as a consequence of merging, to substantially reduce the combined boards of directors and the combined overheads, which is a wonderful thing. And larger companies, larger scope and scale, enjoy, as we said earlier, greater trading liquidity. And as a consequence of that, higher share prices, and as a consequence of that, lower cost of capital. Both of these companies have in their DNA West African exploration. And in Robex, they have an experienced mine builder CEO and operator. This is a unique set of circumstances within a small company. Financial solvency, broad-based share ownership, DNA experience with the task at hand, and DNA also experienced in the upcoming task, mine building and operation. So I'm extremely cheered by this.
All right. Do we have a ranking on the combined entity, Rick?
When it occurs, depending on the share price, this will either be a 4 or a 3. A 3 is a very high ranking for me, Albert, as you know, and
Yeah.
people need to understand the bias in the ranking. I'm much less afraid of political risk than more of my peers. I'm much more afraid of technical risk than most of my peers. This is a company that will have very, very, very low technical risk from my point of view, given the people and the quality of the deposits. But there will be a continued high level of expected political risk here, which may result in loss if my assessment of the political risk was wrong, and will certainly result in investor uncertainty as a consequence of the countries involved. Pardon me.
Okay. Rick, we are out of time again for another week. So I want to thank you for spending time with us. Want to mention to everyone watching on either YouTube or X that we do new interviews every week at rulclassroom.com. This is the online community for natural resource investors. Guys out there, thank you for all the great questions again. And Rick, I'm looking forward to seeing you next time.
Thank you, sir. And thank you again for your efforts in the production of the Gold Bootcamps, which are highly successful. Ladies and gentlemen, if you didn't attend, buy the tapes. Money back guarantee. Can't get better than that. For those of you who aren't on the Battle Bank wait list, get on the wait list. We want to back your business.
All right, bootcamp.rulclassroom.com. Catch Rick and Frank Trotter at the Stansberry Conference later in October. And Rick, let's do it again soon.
I look forward to it, sir.